Pioneer Foods recorded a 44.5% drop in interim headline earnings per share to 131 cents. Revenue also increased 11% to 9.2 billion rand. Joined in the studio now by the company CEO, Hanekom, for more on these numbers. Andre, you talk about the revenue going up, but you don't talk at the top about the earnings going down. So it's a mixed set of results, isn't it? And there are also a couple of one-off costs, BEE and so on, which we can get to. But let's talk operationally first. Revenue up 11%.
Yeah, revenue up 11%, but what's disappointing to us, our volume is down about 6%. So that means
that's the volume of stuff sold.
Yeah, that means inflation in our business of about 70%, and obviously that wasn't good for the consumer.
17% is higher than expected.
Yeah, I remember we had in the past 6 months the highest maize price in the history of since we launched Safex. So yeah, the maize price was really high, and that led into high selling prices to our consumers.
Now, the inflation in some of the other consumer companies, I remember Massmart coming in at 1%, one of the other food companies was 7%. Where does the 17 come from?
Yeah, 17 must
just maize.
Very much driven by maize. We're sitting currently also with the highest price of contract mixes for the cereals part of the business. So we're sitting really with high pricing in our raw material base.
What about these costs? First of all, there's the BEA transaction at 161 million there, and in your scale of business, that's quite a lot of money. What's behind that transaction? Is it finished now? Is it now out of the business in terms of costs?
Yeah, this was our second phase in terms of our BEA transactions we've done. I think what was very positive about the deal is we banked more than 500 million that came out of transactions, so that'll give us the opportunity to grow our business again in the future.
Certainly helped your cash flow.
Yes.
The other cost is the Competition Commission thing, which you did contest and then eventually had to pay. Just give us again the context for that.
No, I think there was no provision in the current results for that. We've provided that in the past. What did affect us this past 6 months, we had to pay part of the penalties, and there's one more payment left.
So that'll be out after the next results?
Yes, that'll be out.
All right. And looking at that product basket decline by 6%, how do you define the product basket and how do you measure? Because you've got so many different varying kinds of products.
Yeah, I think what we see in terms of the value products, the top end of the market consumer, they look at quality and they we still saw some volume growth. We're really seeing the negative in terms of the lower LSM consumers, and that's where the maize price really hit hard as well.
Does that mean that people are, those are staple foods. It's not discretionary stuff. It's not like the fast foods we were talking about, yet people are buying less.
Yeah, I think people are very, very careful where they buy, and price plays a big role. So they're very careful where they spend their money.
What about you? I see in the notes that you've got a new bakery coming up in KwaZulu-Natal, and one doesn't know what to imagine there, but it's 500 million rand, this investment. Obviously the cash flow is helping, you're able to expand there. So what's the reason for that, and what kind of capacity is it going to give you?
Yeah, I think in KZN we have one bakery in Stanger. The bakery is 40 years old, so it's been time for us now to replace the bakery. What we will obviously get is we'll get efficiency. We'll put a new plant in which is more efficient. We'll be able to bake a better kind of loaf, better quality loaf. Then obviously, but that wasn't the main reason for building the bakery. We'll get some added capacity as well in the process.
In terms of market share, with those sorts of mass production lines, do you expect or concede market share?
Yeah, I think if you look at the bread market, we were happy with our volumes. Obviously, if you look at our margin, other bread margin, we still got to do some work there. But the bakery should help with that.
What about the prospects for these businesses? Because on the one hand, they say a food company like yours is in a good place because people have to buy food, but competition is tough. The value proposition is also tough between the different companies. You are competitive. So what is worrying you at the moment as you look at the next year?
Yeah, I think what we saw as the consumer is really under some strain, and we haven't seen the volumes coming through. And in Pioneer Foods, in the last number of years, we spent significant capital in creating new capacity. So we're very well geared for the future, and strategically we're very well placed when that volume growth comes through, that'll be a big benefit to our shareholders and also to the consumers, because we'll be making sure they'll have enough to eat. So I think that's a big play with us, with the consumer under strain, with us spending quite a bit of new capital, creating new capacity. That's not the best space to be in, but in the medium to longer term, we're very confident that we've taken the right decisions in the capitals we have spent.
So investment in future prospects kind of story, with the return not coming in yet. But you say the consumer's under strain. There are a lot of consumer companies which indicate that the consumer is not under strain, and it's not just to market share from particular companies. One thinks of Famous Brands, we talked about a moment ago. Those micro lenders, perhaps more driven by consumers under strain who need money, sure, but they're able to get those loans.
Yeah, but I still see the consumer at the bottom end, they're really turning the money around and making sure that they get the true value for their money. And then that's sort of affecting our business definitely.
Costs, you must be watching the strength of the rand and the oil price. Oil price around about 107 now, down from 120. On the other hand, the rand has been weakening steadily over the last couple of weeks.
Yeah, the rand will obviously have an effect on inflation, should have an effect on food inflation. In our business, what may also be a bit negative is just working capital. Higher rand means higher raw material pricing, which we have to better procure. But so no, that's not good news for inflation. But what we've also seen is a maize price coming down from very high levels lately. So that'll be a bit of a counter to that, and I still see a bit of a decline in food inflation towards the end of the financial year.
What about electricity? We've taken for granted that these increases are coming through, but companies like yours need to worry about that.
Yeah, obviously we need to look at that. So we haven't got much pricing power in terms of that, but what we now need to do is, and that's part of where the CapEx come from, is we need to use less of that resource we're putting in things in place to be able to do that.
What is your record on costs in the period under review? What was your increase in costs?
Yeah, what was interesting, despite a decline of 6%, our cost base went up by about 7%, so we had a per unit increase of about 13%, which is fairly high.